and Baker grew profits after tax 46.4% this half, so 3.2 billion naira from 2.19 billion naira. Even though revenue barely moved, up just 0.02% to 19.28 billion naira. This is a cost discipline story, not a sales story, and it's a genuinely strong one. Cost of sales actually fell 8% to 11.6 billion naira, even as revenue held flat, which pushed gross profits up 15% to 7.67 billion naira. Distribution, sales, and marketing expenses fell 16.5% to 1.69 billion naira. Put those together, and operating profits jumped 36.4% to 4.59 billion naira, well ahead of revenue growth. Below the operating line, things got even better. Interest income more than doubled, up 101.2% to 483.1 million naira, while finance costs fell 43% to 224.7 million naira. As the company paid down borrowings meaningfully, current borrowings alone fell 68.8% since December. Less debt, more interest earned, lower interest paid. That combination pushed profits before tax up 50.9% to 4.85 billion naira. Earnings per share rose in step with profit, up 46.4% to 185.47 kobo from 126.68 kobo. On the balance sheet, cash grew 25.5% to 8.24 billion naira, and total equity rose 16.9% to 15.96 billion naira, with retained earnings up 24.7% to 11.66 billion naira. One number worth flagging: trade payables. What Me and Baker owes its own suppliers more than doubled up 118.4% to 5.03 billion naira. Worth watching, even if it isn't a red flag on its own. The company also raised its dividend payout this half to 862.6 million from 690.1 million naira a year earlier. Revenue didn't grow this half, but nearly every other number did. Is the cost discipline sustainable, or is it borrowed time before revenue has to catch up? Let us know in the comments.